Hey, what's up, everybody? Welcome back to the Dean Rogers Show. Today, I've got another special guest, Mr. Chris Miles. What's up, Chris?
Hey, man, it's good to be here.
Thanks for coming, man. I'm stoked. You are the cash flow expert and anti-financial advisor. Excited to dive into this because this is applicable to really any business. Of course, I love real estate. A lot of the listeners are in real estate, either wanting to invest or already investing. So I know this is going to help them today. Chris is the leading authority teaching entrepreneurs and professionals how to get their money working for them today. And Chris, you're an author, podcast of the Money Ripples podcast, been featured in U.S. News, CNN Money, Entrepreneurs on Fire, Bigger Pockets, and has a proven reputation with your company, Money Ripples. You guys can find out more about Money Ripples if you go to moneyripples.com. If you're watching this online, we'll have that pop up on the screen as well. We'll have it in the show notes. And you're working to get your clients fast financial results. In fact, you've got a big number here. Your personal clients have increased their cash flow by $300 million in the last 13 years. We talked about it before the show. You said you're excited to get them to $1 billion. So last thing, if you're wanting to get in contact with Chris, you can go to info@moneyripples.com. You can go to moneyripples.com. You can find him on social media @moneyripples. And of course, check out his podcast. He's got incredible guests, the Money Ripples podcast. So, all right, Chris, tell me what kind of results are you getting? Your clients, what is it that you do? Let's share with the audience what you got going on.
Yeah, I mean, the simplest way to put it is we're like Rich Dad, Poor Dad applied, right? Because the one complaint people have, even though Rich Dad, Poor Dad's changed so many of our lives, the truth is people are like, yeah, but how do I do that? How do I create passive income? How do I actually get out of the rat race? And they never really tell you that. And even if you pay Rich Dad's companies, you know, his affiliate companies that he's got, that tells you to invest in the stock market after he told you not to invest in the stock market or whatever else it might be, you know, you pay him $50,000 and you have somebody who makes $15 an hour tell you how to do stuff because they teach you out of a manual. And that's not what we do. I mean, we actually have real life experience because I myself have been financially independent, not once, but actually I became financially independent twice by the time I was 39. That just means I screwed up. So I had to do it a second time just to get myself back out of the rat race there by the end of 2016. But I mean, that's really what it is. It's really teach people how to get out of the rat race. Like, what do you actually do to create real passive income, not another job or another business or side hustle, but actually passive income where you work because you want to, not because you have to.
I like that. So I think that's why most people start getting like wanting to be an entrepreneur, starting a business is they want to have that passive income. And I think it's kind of mysterious. Like, how do I actually do it? Now, in real estate, of course, naturally people say buy rentals. At least for myself and many others that I've spoken to, you can buy rentals, but that might take a lot longer than you think to actually get the cash flow going. And then, you know, it's a different skill set, and I don't know if I have the capital to do that. So I think it just begs the question, how do I get there? How do I get to passive income, financial freedom? And what's your answer?
Well, a lot of you guys are doing the right thing, right? You're investing in your business right now to kind of build that economic engine. Now, that's not passive income, right? There is no way, shape, or form that anything about your business is passive. It's very, very active income. In some ways, it's probably harder than working a job. I know when I started my own business, I said, man, I kind of have daydreams. You know how people daydream about quitting their job? Some people daydream, like especially when you're a business owner starting out, you daydream about having a job again because you're like, man, I remember how I was so brainless. I didn't have to think about anything. I only had to be the worker in one role. I didn't have to think about all these elements of my business happening at the same time.
That's funny.
But it's good because the truth is, I mean, I became an entrepreneur over 20 years ago because I wanted control of my time and my money, right? I didn't want someone to tell me how much money I could make. And so when you're starting out, that's the way it should be. And it's funny because 20 years ago, I started out as a financial advisor, 21 years ago to be exact. And I was telling people to put your money in mutual funds, sock it away for 5 billion years from now so that hopefully you'll retire someday, investing in crappy, high risk, mediocre returning mutual funds. Well, I remember sitting down with my brother-in-law. He came from a very wealthy family, a family that actually sold their businesses to the guy that eventually bought the Utah Jazz, and
wow.
So, these guys had millions of dollars, and I figured as a financial advisor, if I got in with that family, I'd be set for life because I can manage their assets and be wealthy. Well, I sat down with them and I started telling them, hey, you can invest your money like this and make a 12% return, like it was actually real back then, which it wasn't, right? But all these things I would say. And I remember my brother-in-law stopped me. He said, Chris, how many, like, let me get this straight. If I just give you 10 grand to play with, you're telling me you can make me 12%. And of course I backpedal. It's like, well, I can't guarantee 12%. Past performance is not indicative of future results, right? All that kind of crap. All those disclaimers I had to put on it. But yeah, that's what history's taught us, that it's 12% in the stock market. Okay, Chris, well, that's $1,200 a year. But Chris, I can take that same 10 grand. I could put a down payment on a semi truck. He was in the car and automotive and trucking business. He's like, I could put a down payment, $10,000 down payment on a semi truck, turn around, flip it a few months later and make $20,000 profit. So that's a 200% rate of return in a few months versus your 12% maybe in a year. So why would I invest with you? Like, well, you should be diversified. You should put all your eggs in one basket. Besides, business is risky, which is bullcrap because the stock market's risky, way riskier than business. Business has some risk, right? But look at evidence. Look at the Fortune 500. All of them have businesses. So that should be the place that becomes your first and foremost investment is your business. But don't stop there because the problem is most business owners, this is a mistake that almost every entrepreneur makes, is that pretty soon their business is the investment only and it becomes that way forever. And what happens, they end up creating a job for themselves. They never get out of that rat race, even in the wholesale and flipping. You and I have got so many friends in this space. And there's so many of these guys that when you talk to them one-on-one intimately, they're in their own rat race. They might make millions of dollars, but then they feel trapped. They have no time freedom. They really just are very rich guys. They have the exterior life, but they don't have the time. They don't have the lifestyle, the real lifestyle, right, of freedom. But the ones that have done it are the ones that develop other passive streams of income. And so, yeah, you can do rentals. And by the way, I'm all about alternative investments. If you couldn't tell already, I'm anti-mutual funds, anti-financial advisors, which is why I'm an anti-financial advisor. But the big thing is that, whether you're doing investment properties, whether you're looking to do syndications, you're going into somebody else's deals, whether you're going into a fund, these things can all be real estate based, even oil and gas. There's great things there, raw land. There are so many places you can put your money that are backed by real assets like real estate and make double digit returns without you doing crap, and that's what I love. Like that's the kind of money I like to make. That's what I've been able to do for myself is I started with business first to help develop streams of income that would help me have enough to then invest, create additional streams of income outside of my business. So then I get to the point where I really can say I'm work optional. I work because I want to, not because I have to.
So if I heard you right, the best investment, like the example you gave about the guy who bought the semi truck, is to reinvest back in your business.
That's the start. But you're going to get to a point in your business where you're going to realize, wait a minute, if I keep just reinvesting, eventually there's that law of diminishing return. It's going to get to a point where you hit this stabilization period in your business where you're going to say, yes, I could keep reinvesting money in my business, which really means, I like what Mike Michalowicz, you guys know who he is. He wrote the book Profit First. Yeah. Pumpkin Plan, that's another good book that he wrote too. Mike Michalowicz says, when you keep reinvesting in your business and all your money goes back in, you're not profitable, right? You're really just a slave. You're really just spending money. So it's okay to invest money in your business and a certain percentage should go there, but a certain percentage as you start to stabilize should go into creating additional streams of income that help you personally, that allow you to create passive streams of income outside of that active business. So if you're a wholesaler, great, wholesale away, like wholesale the crap at, day and night if you want to, but take some of those profits, not all of it, but take some of those profits and use that to invest in other things that generate passive income that you don't have to work for. Otherwise, if it keeps going back in the business, next thing you know, you just keep putting in more marketing dollars. You just keep turning and cycling and you're hiring more and more people. Your business gets bigger and bigger and you create more and more tethers to your business. So again, the business is your economic engine to develop more profits, more money to take home. And then you take that money and invest it and create passive investments there.
All right. So you got my brain spinning. You got me excited. What are some of the vehicles outside of your business, the main revenue generator, which I'm a firm believer in that too. Like, I think a lot of people will get too excited. They're now chasing a bunch of shiny objects. They think they're really good at all these things when they actually probably aren't that great at the one thing they're already doing. Right. And they need to get focused and get that really dialed in first. Once they do, I think the next problem that I see, and I have to remind myself this, is not to go try to be an expert at something else.
Yeah.
You took all this time to develop these skills and get really good at something that's making you good money. Keep doing that. Right. But you should be investing in other things. I think that's a really good point. And I'm reflecting on it too. Like, you make money in your business. If you just only reinvest back in that business, keep that money only there, how are you going to grow in other areas too? So it gets me thinking. I'm talking just you and me right now. I'm thinking like, what else should I be doing? What else should the listeners be doing outside of their business? And for me, I have my wholesaling, fix and flip, and rental business. What else should I be doing outside of that?
And it's good that you have a rental business, because 2022 just beat the snot out of people, didn't it? I mean, whether you're a wholesaler, especially if you're a flipper. I mean, if you're relying on that and that was your only strategy, depending on the area you're in, you were screwed. You were probably, you're like a lot of people in our mastermind groups are a part of, whether it be like Family Mastermind or Collective Genius, I'm a part of as well, right? I mean, some of those guys that were especially young in the business got hosed, having that rental business is good. And so if you could cherry pick some deals, awesome. Now, me personally, I used to try to do my own property management and, after flipping, try to hold on long-term rentals. I was horrible at it. I'm a horrible property manager. So like what you just said, I like to farm it out, right? I like to delegate it. So what I do now strategy wise is I go more for like turnkey real estate properties. So I don't necessarily have to go buy my own. I can go somewhere completely in a different part of the country, because like I live in Utah. Properties here suck. I mean, almost anything in the western half of the United States is hard to buy good properties, but looking out in the Midwest or the Southeast, there's lots of great options that cash flow. In some cases, the cash returns might be, maybe only 6 to 10% on just the cash flow alone. Sometimes they're 10 plus, but for the most part, like I'm getting all the tax benefits from that. I'm getting, of course, any appreciation. I don't bank on it. I made that mistake in the last recession to try to bank on appreciation. That's just a bad thing to do. That's why flippers go broke. All that kind of stuff, right? So again, that's one thing I like to look at is turnkey real estate. Another one I mentioned was syndications. So like you mentioned, I don't have to be the jack of all trades. There are people that have, multifamily, right? Like they can buy apartment buildings. Right now, it's not the greatest market, but I do predict later in the year 2023, we're going to start seeing better opportunities for that. But self-storage is a great one that just now starts to make a comeback. It's kind of like where I see multifamily going. Multifamily, although they're starting to get desperate, they don't want to let go of that high price they think in their mind is what it should sell for. Well, self-storage, they already got hosed in 2022. So now they're actually willing to settle for a price that's like 30, 40% less than they were trying to sell it for 6 months ago. So self-storage is another great place. I find operators that have been in that space for at least, in my opinion, I like to have people that are operators for at least 15 years. They've been through at least one good recession, one good full cycle, so they know how to adjust. It's their main thing that they just do, like they know it like the back of their hand. So whether that's multifamily apartments, self-storage, whether that's, even looking at commercial real estate, all that stuff. Another place is oil and gas. Actually, you can actually get paid lease on the land for oil and gas and get paid royalties. And so I'm investing in a syndication where I get paid on that. That's been paying between like 10 and 20%. Some cases, some of those funds have been paying more, but I think it's awesome. Plus, if I'm going to have to pay more at the gas pump, I might as well make money at it. Right. So it's kind of nice to have that option and kind of diversify away from just the typical real estate. My favorite one actually that's been happening lately, I got into a business partnership with some other guys that are doing the active investing. They're actually doing more raw land. So they're seller financing and flipping them that way. And right now I'm getting roughly about a 45% rate of return on my money on that business partnership. So that one's been awesome. because I do jack squat. I'm just the financer. They're doing all the work. We split the partnership, but still, I've probably invested a little over in total, probably a little over 175,000, probably almost 200,000, but it's making me over 7,000 a month right now. So,
wow.
Those are kind of things they're great. And so just diversifying in those different areas, funds. There's friends that we have. I know we're going to be listening to one of them speak next week. He's got a fund that they hard money lend to hundreds of investors, right? They got like 350 different loans that they have outstanding right now, different portfolios, only like 3 of which are delinquent, which is awesome if you think about it in comparison. So, they're usually paying between 10 and 12% per year. But again, I can just put whatever money I want, even if you're not accredited. If you're not an accredited investor, not a problem, because they have a fund you can put in a minimum of $1,000 into. So there are options. There's so many options that, when you think about it, like even beyond just what you can do in your business. Even when you get those financial advisors, their stupid, stuffy suits coming at you, trying to tell you to invest all this crap. You don't need that stuff. To make, to lose 20% last year versus making at least usually 10% a year, right? I'd much rather have that. I'm going to kick the crap out of any financial advisor any day of the week. They'll never keep up with the things that we can do in the real estate space.
So you got a lot of good stuff I want to unpack there. So you first mentioned, and you brought it back full circle just now, mutual funds. Mm-hmm. Why does every financial advisor push towards the mutual funds? Like, they give you that statistic, right? Like you said, 12% in the stock market over the past 30, 40 years, blah, blah, blah. You'll get rich on that. You see the social media little videos where someone goes, how did you get rich? And they're following some guy on Wall Street. I put my money in mutual funds and blah, 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 right? So what are your thoughts on that?
Well, if it works so well, where's the evidence, right? I did a podcast on my show last summer where I've actually did like the case against mutual funds. Like, let's treat this like as a court case. There should be witnesses. There should be evidence, right? And I know from my experience, because 20 years ago, I started out as a financial advisor. But I'll tell you, like, I remember sitting down with my dad, who actually was the one that inspired me, because my dad was the kind of guy that taught good values, but he was also like that he was like Dave Ramsey's older brother, right? This guy was, a tightwad to the nth degree, saved everything. It was all about paying off debt. And I remember I sat down with him. He asked me to be his financial advisor at some point. He was 61 years old. I'm sitting down at his kitchen table. He says, "All right, Chris, here's my stuff. What can I do?" He paid off his house in 18 years, right? He was all debt free, stuffing money in his 401k. And I said, "Dad, based on what you've got here, if you didn't have Social Security, you better hope you die in 5 years, because that's how much money you have after saving your entire life. You've got 5 years worth of savings."
Crazy.
And he's like, "Well, what should I do?" I said, "I don't know, because you did everything that I would have taught my own clients. In fact, I have been teaching my clients for the last 4 years. So you've done everything. In fact, you're doing the things I'm doing, and the same goals that I had, because I wanted to be financially independent when I was 40, and yet it didn't work for him." And that really got me questioning it. And when I started thinking about the training I got, understand that financial advisors, the training they receive are from financial institutions like the Fidelity, the Merrill Lynch, the Goldman Sachs. Well, why do they provide all the financial education? Well, because that's where they make their money. They're going to tell them to sell their crap, right? They're going to tell you get the assets under management, and you've been in the sports arena. That there's financial advisors that are all about trying to take whatever players' money they can, get those assets under management. And then that is where the financial advisors make their money, not off the investments. And I can tell you from personal experience, I remember when a friend in real estate investing, really confronted me on it before I left. He said, "How many of your clients are financially free where they don't worry about money?" I said, "Well, none. Even the retired ones still worry about running out." "Okay, well, how many of you guys, there's over 100 guys in your office, how many of you guys are financially free? Not off the commissions you're earning, but actually off the investments, the mutual funds." And as I realized that there's guys working there since the late 1970s, still not retired, I realized none of them are. So there's no evidence for it. So they tell you 12% because they're going off average returns, right? Have you ever heard the example where someone has $100,000? If you lose 50% in the market, you're down to 50,000. Well, what do you need to make to get back to 100,000 again? Well, not 50%, right? You need a double your money. You have to get 100% return for that 50,000 to become a 100,000 again. Do the math. If you go back to you kind of like your junior high math, you're doing averages, right? Well, maybe junior high. It depends on how smart you were. Maybe it was like grade school for you. But, you do your math. If you take 100 minus 50, you get 50. Now, if that happened over 2 years, you divide by 2 years, that's a 25% average return. Yet your actual yield is 0%. And if actually you take out the financial advisor's fees, you probably have more like $96,000 or $97,000 instead of $100,000, right? So you actually lost money, even though it shows a positive 25% return. They always go off averages. I love what Ben Stein's dad, Ben Stein, he's the guy who used to say, in the Ferris Bueller's Day Off, Bueller, that guy.
Yeah.
His dad was a Harvard economist, and he gave him a good quote that I still use today, is that figures don't lie, but liars figure. And what he's saying is, like, you can manipulate the numbers to make it however you want. You can even be honest with the numbers. Honestly, they can show average returns and it looks better, because once you have a negative year, nothing works out. You lose 10% in the market, you need 11.1 to get back to breaking even. You lose 20%, you need a 25% return. You lose 33, you need a 50%. You lose 50, you need a 100% return. You lose 90, you need a 900% return to get back to zero, right? You start to do that, you realize these are not actual returns. So the actual return of the stock market, the S&P 500, right, which is what everybody claims is even better than most mutual funds, the actual yield for the last 30 years is only 7.6%. 7.6, not 10, not 12, 7.6. Put those numbers into your financial calculator, right? Even have your financial advisor say, show me 7% return on the money I'm putting in. And don't put that stupid 2 or 3% inflation. Let's be honest. Let's put it at least 5 to 7% inflation. And let's just see how much money I really have if I'm going to live on 3%. And that's the problem, is that it's just not working. I mean, the clients I've had, I have a guy that's out in California, just retired from the military, and had $1 million. And his financial advisor said, great. Well, you should, if you don't want to run out of money, pull off $3,000 or $30,000 a year, less than $3,000 a month, like $2,500 a month. He's like, I live in California. Who can live on $30,000 a year in California? Heck, they're even talking about passing laws to pay homeless people almost that much, right? So there's no way. And so he came to me, he said, what can we do? And we started looking at different options, had him like look at multifamily investing, bought some turnkey properties, put a bunch of money in his oil and gas and things like that. And now that $1 million is generating on average about $11,000 a month, right? Not $2,500 a month, but $11,000 a month. Again, it's always about cash flow. And as a financial advisor, you just don't see it. And that's where all the education comes from. It comes from the financial companies teaching through banks and everybody else telling you what you should be doing with your money. But the truth is that nobody's really becoming financially free doing that. And the worst part is that it's not more prevalent in the media than it should be.
That's interesting. That insight's, I think, really helpful for me to hear. It's helpful for others to hear, because there might be someone listening to this where they're just starting to make money, or maybe they've been making money, looking to invest to get passive income. And I think what's been sold to the masses isn't really what works. There's so many other vehicles out there that you mentioned. So I took notes. The first one I wanted to talk about was turnkey real estate for rental properties versus like what I do. I am the market expert in Central California. We come across deals. We do 10 deals a month in our wholesaling and flipping business. And anyone that pencils for us, we peel off and keep as a rental. And we stay focused there, right? Every day, day in, day out, we're happy and willing and able to remodel that property. We've got the resources, the relationships to do that. But the average person doesn't, because they're not doing that every single day, nor are they doing it at volume. So to say it's easy to just buy a property, then have to have the skill sets and resources and relationships to fix it up and then get it, rented and do all that kind of stuff. That can be a lot to take on, So I think turnkey real estate can be a good option for people, because you're buying something that's been fully remodeled, ready to go. And to your point, most markets, especially the West Coast, to get a truly turnkey property, to make that cash flow is, I don't want to say impossible, but it's near impossible unless you negotiated or came across an incredible, amazing deal. But if you're talking about the everyday, I can go find it right now, it's near impossible to find something that's turnkey, ready to go. You don't need to lift a finger, right? If you want to have the sweat equity and get the discount and do the work yourself, yes, you can make it pencil. We do that. But for you, right? For you that's wanting, I want to just buy the asset that's ready to go and rent ready. What are your favorite markets, presumably in the Midwest?
Yeah, the ones I've loved, I mean, it rotates. Like for example, some of my best turnkey properties I bought several years ago, right? Like for example, Memphis, Tennessee. Now, right now, Memphis is okay, but it wasn't as sweet as it is now, or was 4 or 5 years ago.
Because prices have increased.
What's that?
Because prices have increased.
Exactly. Yeah. Prices increased. Rents haven't quite caught up to that, so it can vary and rotate. Currently, I mean, like I have North Carolina. I like that. I have some in Alabama. I would not recommend Alabama as much. I haven't enjoyed Alabama as much as I thought.
What part of Alabama?
But, Alabama, one is just finding good property managers for one. And then two, sometimes finding good renters is not always easy. I've realized
which part, because I know some other people that are doing it there love it, right? But everyone's going to have a different experience.
Near Birmingham, that kind of area.
That's what I figured.
Yeah. I mean, I've got I've got ownership in like syndicated deals with like apartment buildings in Alabama, like even Birmingham. It's great. But I've noticed with some of our rentals, like we've had crappier tenants recently, and that comes back to property managers. You have to have a good one, of course. Yeah. That's the risk with turnkey. You have to make sure you trust them. But I think right now, I mean, we're really looking more like Arkansas, Oklahoma a little bit, although that ship is now passing. Texas has got some pockets, just not in the big metro areas. Florida, I actually think that Florida's got a lot of good stuff, especially inland more. There's a lot of good properties around there, like Ocala and places like that. In fact, I'll tell you, I mean, one of my mentors, a guy named Eddie Wilson, he's a guy that's bought and sold many businesses, been heavy in real estate for a long time. Even he was, we were in Jacksonville together chatting up, and he's like, man, like I want to buy a 100 portfolio, like a 100 property portfolio here in Jacksonville area, like at least in this part of northern Florida or central Florida. And luckily I knew a turnkey guy right there, a few miles away, and got him connected. But I mean, there's a lot of good markets. I mean, there really are. Even like I said, North Carolina, I think is still good. Midwest, definitely stay away from stuff like the Ohio area, like anytime I hear somebody say they have Ohio properties.
That's controversial. I know a lot of people that are doing Ohio. So tell me what's your opinion on Ohio is.
Well, it's one of those things. If you're more of an active investor, it could work out well. Most of the time I see people like doing turnkeys in Ohio. They're usually like C-class type properties. They're like trying to buy them for like $40,000, $60,000. And although they could cash flow well, I've never seen any owner that's really been super happy with them. Especially when they're not happy, when they never appreciate, right? They do them more as a cash flow play. That's fine. But then they realize, oh, well, yeah, but these tenants kind of suck because, they're almost always Section 8 tenants. What's that?
Not paying, wrecking the property.
Not paying, not keeping up the property. So you have to do a little bit more CapEx, for those properties and stuff. So
but with even though you get a higher, right? Aren't they typically a little better, even though they might not be in a good financial spot, but they want to maintain their ability to rent Section 8 and get that government assistance. Don't they have to uphold the quality of the property and maintain their?
They're supposed to. They don't always, but
stuff. Yeah.
I mean, and especially because it's hard to get into a Section 8 property, get it approved, right? So they don't want to do that. It doesn't mean that they'll be foolproof, because I mean, that's what got me out of property managing my own properties, is I had clients like that or tenants like that before, and even then they can still trash it and walk on and just sucks, but I'm not saying that's everywhere, but I've noticed with my clientele, like the people that come that say, I want to be more hands off, I don't have to worry about this. They tend to have more stresses with the property because it's usually tenant or maintenance or just in general. Like it's just not producing for them. They realize that they're not really gaining anything beyond the cash flow, and they want that growth. They want that appreciation too.
Mm-hmm. Okay. So I think something that would be good, I think you got a lot of good pointers here. I think something that would be good to leave the listeners with. You mentioned a lot of other good investment opportunities outside of the traditional put your money in with this financial advisor, mutual funds, wait till you're about to die to get access to your money, and you're not happy with the results of how much you have left. So as people are getting money now, right? We talked about this. To have the money, you likely need to get really good at what you're doing in the first place. Definitely. To have access to that. So focus there first, get really good at that, generating money. But instead of just keeping it in your active business and not really growing outside of it, start to invest other places so you can get passive, truly passive income results. You mentioned, besides turnkey real estate, oil and gas, syndications, raw land, different funds that are doing hard money loans and stuff like that. Where do people find these opportunities? What is, not necessarily the website, but what is, like, if I want to break into oil and gas, I happen to know some people, so I could reach out and text message some of those people right now. But for oil and gas or syndications or raw land, different funds, where do you even start? How much money should you have to start with before you even start looking?
Yeah, I would say before you even worry about looking, have at least 200,000, available in cash. And that's even just for doing some simple stuff. I would even lean towards at least $250,000 before you worry about trying to invest in like certain types of syndications, because you don't want to put all your eggs in one basket. If that syndication has a minimum of 100,000 invest, you don't have to say, oh, I'm going to throw all my money in here. If it goes south, that's not good, right? So you do want to diversify a little bit when you're doing that, when it's not your control, right? When you see your money, you can just go all in, right? It's kind of like Mark Cuban says, diversification's for idiots, because when you're a business owner, like that is your thing, that is your primary investment. But when you start going outside of it, that's when you do need to start diversifying a little bit more. I would say this. I've had to build that list up over many, many, many years. Start there. Like I said, find the people that are more experienced. Mastermind groups like you and I are part of are a great way to meet some of those people that have been there, done that, still doing it today. So important. I tend to stay away from people that are syndicators that say, hey, I just showed up in 2018. I can do your real estate now. It's like, nah, that's cool. I'm happy for you, but get a little bit more gray hair, get a little more experience under your belt first.
Get some failures first, right?
Yeah, exactly. Like get yourself burned on a few deals, not with my own money, right? Like burn your own money on some deals, gain some experience and wisdom. Then let's, talk about taking my money, right? So that kind of thing is a great way to do it. But yeah, those mastermind groups are a great way to connect. You can always leverage people like what we do. Like we have our own membership for our clients and can connect them to deals and people that we've vetted. Doesn't mean it's guaranteed, of course, because there's always risk with anything, but we've gotten that. We have like a list of over like 20 some odd deal providers. And even like 5 or 6 of them are turnkey providers, and got lots of syndicators and funds and options that way. Even short-term hard money lenders that are essentially guys in your same industry, just ask for money to do their flips and do their deals, So there's a lot of options, of course, but that's the best way to do it. I would say like last, kind of cool little hack you can do too. If you're building up your cash, or you just want to build up more cash and start to earmark it or use it to invest down the road. You and I first met when we met with Strat, right? We're at one of Strat's events here. That was here in Utah. And, I talked about infinite banking, not the traditional kind that you hear about, from most people, most infinite banking type stuff, which is essentially creating a tax-free supercharged savings account using life insurance, right? The benefit is that you can actually get your money to pay you in 2 places at the same time. But if you ever look up infinite banking, most of the guys out there, as good hearted as they are, rip you off. You pay way too much in insurance costs. So, I have a whole playlist on the Money Ripples channel. You can see where we talk about infinite banking, that kind of thing. But it's pretty cool when you start using it with real estate and or business, and you can even write off the interest and everything that you're doing and essentially get your money to pay you in 2 places at once. It's a pretty cool strategy you can use to get your money just to amplify and give you a little bit more leverage. Yeah.
No, some of those concepts will get your head spinning with ideas, what you can do.
For sure.
Well, awesome, dude. This has been super fun for me to go through and talk about the way to think about using your money and when to use it the different places you can use it. You are, as you said, the anti-financial advisor, not, I'll take your money, I'll charge you a fee and just place it over in this little, fund and let it not do a whole lot. So, appreciate all your insight. It's been awesome and fun for me. And I know the listeners will definitely enjoy it too. Again, everybody that's listening, if you want to connect with Chris Miles here, you can go to info@moneyripples.com, shoot him an email with any questions or connect with him on the stuff that he's doing. You can go to moneyripples.com. You can go on all the social media platforms @moneyripples. And of course, check out the Money Ripples podcast. Thanks for being on, Chris. It's been a great pleasure. Any last words you want to leave the listeners?
Yeah, I'll just say this, that if you're charting a path that's the road less traveled, the road less traveled, as a business owner, I mean, people might think you're insane for doing what you're doing. And here's the thing, anybody who says that, if the masses are saying one thing, do the opposite. Like, the opposite are the people that prosper, the opposite are the people that actually become wealthy and have an extraordinary life. You don't want the ordinary life. So keep doing what you're doing. Like, just know that you're doing the right things. You're listening to the right people right now. You're in a good place. Yeah,
absolutely. And to echo that, you guys should most definitely reach out to Chris. You've heard me say it more than once. Networking and connecting again around high-level individuals is going to be the quickest way to accelerate your growth. So make sure you connect with Chris. Appreciate all you guys listening. Until next time, peace.